Hello, it's Caleb Preston here with McKinley Mortgage Company, and in this video we're going to answer the question, what determines the value of my note? And there really are four main factors that drive the valuation of your specific individual note. Every note's different. I mean, very rarely do you have two notes that are exactly the same. Well, they never are because there's different pieces of property. Terms can be the same. But the four main factors, the first is the paperwork. And the way you can easily remember this is the 4 P's. So the paperwork, how is the note created? What is the amortization of the note? The amortization is how long has the payment stream been stretched out? Are they monthly payments, quarterly, annual? Are there even any payments at all? Is it just a balloon note? So the amortization, the shorter the amortization, the higher the monthly payment, the more valuable the note. So if you have a note that's stretched out over 30 years, that's going to be worth less than a note that's only has payments over 10 years. Why? Because we talked about the time value of money in a previous video. Money today is worth more than money in the future. So the faster that money comes back to the investor, the buyer like ourselves, then the more valuable that note is. The second factor is the interest rate. A note is going to be an investment that's going to give a specific yield to the investor that's buying it. So if you naturally have a higher interest rate on your note, that's naturally going to give a higher rate of return to the note buyer. And thus the higher the interest rate typically and the shorter the amortization are what drives a more valuable note from a paperwork standpoint. The next is the payer. How much cash did the payer put down when they bought the property? That's going to be a huge factor in determining the value of the note. If they only put 2% cash down, that's worth a lot less to a note buyer like ourselves than if they put 20% or 40% cash down, which shows more vesting into that property. They're likely more committed to staying in that property long term. Also, what's the payer's credit? That's going to be a big factor for us. We do have the ability to pull credit when we're buying these notes internally, and so looking at what is their credit score is going to be a factor into the equation as well. In addition, there's also performance. So we have paperwork, payer, and the performance. How well is their pay history? Have they paid consistently? Have they been late at times? If they've been consistently late or not making their payments on time, that will lessen the value of the note to a buyer like ourselves. So those are the 3 P's so far, and the fourth is property. What's the property type? Some property types are going to be worth more to a note buyer than others, and the main factor that really drives the value of the note from a factor of can we buy the whole note or can we just buy a partial is how much equity is there in the property. Now, when I say equity, I'm referencing what's the balance of the note versus today's property value of the note. So if there's not much of a difference, if you've got a $100,000 property and your note balance is $90,000, that's what we call at 90% LTV or loan to value. So loan to value is a percentage that represents the relationship of the note balance to the property value. Typically, if you're going to want to sell your entire note, you're going to want to have a loan to value at or under 70%. So if you have a property worth 100, balance is 85, there's a good chance we probably won't be able to buy that entire note. And the reason why is there's not going to be enough equity for us to be comfortable in the event of default and foreclosure on that contract. So when that happens, we still can often buy a partial, buying part of the note, but we probably can't buy the whole thing. And we'll have other videos that will talk more about the differences of fulls and partials. So I hope that answers your questions on what drives the value of my note. Once again, every note is different, and the way you can remember it is the 4 P's of paperwork, payer, performance, and the property. Thank you very much, and have a great day.